All right, welcome back. The investment committee is answering your questions. First up, a video question for Jim from John in Cincinnati.
Hi, my name is John Munzer. I'm from Cincinnati, Ohio. My question is on Rocket Mortgage. The company has had consistent earnings quarter by quarter. They're getting into solar and auto refinancing. Interest rates are low. Applications for home mortgages are up. And I'm just trying to understand why the company is underperforming the marketplace. Thank you very much.
You know, John from Cincinnati, a kind of okay HBO show, but a great question from him. Jim, what do you think?
Yeah, this is a tough one, Rocket Companies, because we know that the housing market was on fire until really, early this year, and mortgage applications have fallen off a bit as interest rates have risen. You know, if you think, as I do, that the 10-year is going to continue to rise, that the yield curve may get a little bit steeper, I hear you that they're doing more things like auto loans, but they're still going to be known as a mortgage company, and mortgage rates are going to go up as interest rates go up. That seems to have more of a strong hit to the housing demand. So I just think it's a tough place to be right now. I don't think it goes lower from here because there's still demand for housing, but I just think it's a tough place to be. I don't think you're going to get the net interest margin that you're hoping for as interest rates go up.
All right, next up, Pete, we got a video question for you.
Hi, this is Jack in Germantown, and this question is for Pete. He had mentioned buying a number of calls in the EV space last week. I think he mentioned Workhorse, Energy Transfer, Blink. But what about Volta charging, VLTA? It went public August 27th via SPAC merger, and it's had a very high call-to-put ratio this morning as well as last week. So do we buy calls in Volta? Thanks.
All right, Pete, what's the call? You going to buy calls in Volta, or do you recommend doing that?
Yeah, it's a great question. The reason I would say yes would be not because I'm seeing unusual activity in there right now, quite honestly, Frank, but the idea of knowing exactly what your risks are going into a trade. This is another in the EV space, charging stations, all of that. We know how important all of that is and how fast people are trying to get out there. There are so many different companies. I would only do it through the options, though, because at least I know exactly what my risks are going into the trade, but I'm not seeing unusual today.
All right, Stephanie, we got a question for you. Jim in New York, they want to know your outlook on Match Group. Basically, you swiping left or swiping right on the stock.
I like it very much. It's only up 5% year to date. It's a spin. It's a spin out from IAC, and I like spins. It's a reopen play as people want to date in person, and I like the M&A that they're doing as well. So I still like it very much. Yeah, Match Group also offering like a verification badge on the site. I'm not on it myself, any of the sites, but did a story on it. They offer a badge that you can have your vaccination status. So I agree with you. Definitely a big reopening play right there. And lastly, Joe, a question for you. Jeffrey in Brooklyn wants to know, should they add pause to their position, or are they dun-dun-duns? I'm going to do the rim shot ahead of time. Barking up the wrong tree.
So Jeffrey, I added a pause to my portfolio a very long time ago, and I think you should as well. It is a very diversified way to play the growth of the pet industry. More households in this country own pets than have children. I know a lot of people wanted to own just Chewy. Chewy peaked at 120 back in February. You get so much more. You get Zoetis, you get IDEXX Labs, you get Freshpet, and you get Chewy. You get all of it. Diversified pet industry ETF.